What's up, bro? So, order blocks and breakers, right? So, I'm gonna use the screenshots for examples. Okay, so breakers are basically when you have like right here. Okay, so we have a high, a low, and a higher high. When we come through this last down close candle, that's your breaker. Okay, so a breaker is in between two highs or two lows. Okay, now this is a bullish order block if you are bullish. So if we are expecting higher prices and we don't want to see anything going lower, this last down close candle before this move higher would be your bullish order block. Okay, you'll look to buy that and take it higher. But if you're bearish and you're expecting lower prices and you don't want to see this act as support, you're expecting price to go through this and treat it as resistance here, come back, treat it as resistance here. Okay, so again, high, low, this high comes higher than this high right here. And that's your bearish breaker. This last down close candle in between the two highs. Let's look at another one. So this is a bullish breaker right here. Okay. So right here is your low. We have a high and we make a lower low. If we're bullish and we're expecting higher prices, we want to see this up close candle act as support once we get above it. We act as support here, act as support there, and then we act as support there. Now, this, if we're expecting lower prices, this would be a bearish order block. Okay, this last up close candle before this moved lower. If we're bearish, we will want to see this act as resistance and send price lower. We don't want to see this traded above. Okay, but since we're bullish, all right, low, high, lower low, the last up close candle in between the two lows is your bullish breaker. Support, 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 and then we rally. All right, let's look at some more. Okay, this is your bearish breaker. This last down close candle here before the move higher, this traditionally would be a bullish order block. But why isn't it a bullish order block and why does it fail to act as support going higher? Because we're bearish. We traded up into a daily fair value gap. Okay. Now you can expect some measure of retracement or reversal. So we have a high, a low, a higher high. This last down close candle in between the two highs, that's your bearish breaker. You draw that through and you can see we act as resistance, come back up, resistance, break lower, come back here, resistance with the fair value gap, and then we break lower. Okay. So now let's look at some order blocks. So right here, this last up close candle before the move lower is your bearish order block. Okay. This last up close candle here before this move lower is your bearish order block. Trade up into it, resistance there. Look at some more. This is your breaker. Okay. These three consecutive down close candles, we have a high, low, higher high. These last three candles here is your one consecutive bearish breaker. Resistance to perfection right here. Break lower, resistance, resistance. Can't get back above this high. We break lower. Now, here's an example where this could have been a bearish breaker or a bullish breaker, sorry, but we're bearish. So notice how we have this low, high, lower low. If we were to get back above this candle here, this last up close candle, that would be a bullish breaker. But we're bearish, right? So you still have to know where price is going. So since we're bearish, we don't want to see this act as a breaker and send price higher. We want to see this act as a bearish order block and send price lower. So we're not looking at this as low, high, lower, low, get back above it, treat it as support. We want to see this just as a regular bearish order block and use it as resistance. Okay. Let's see if I can find some more. Okay, so same thing here. So notice how this is also breaker, low, high, lower, low. But look at this right here, this last up close candle. Okay. Low, high, lower, low. If we're expecting higher prices, it would get above it and treat it as support. Instead, we draw that opening price and it treats it as resistance and we get a short-term retracement. Okay. This is a nice breaker here. So we have a low, high, lower low. We rally We disrespect this up close candle, which normally would be a bearish order block. But why doesn't it send price lower? Why doesn't this last up close candle act as a bearish order block and send price lower? Well, we just took out sell side, okay, a 15-minute sell side low, and we traded into a 5-minute fair value gap. So you can expect a retracement or some type of reversal. So low, high, lower low. We blast through this up close candle, which normally would be your order block. We come back all the way up, trade right back into that with the fair value gap. That's a good buy, and then we rally. Okay, so this is a bearish order block, but are we bearish? No, we're bullish, right? We're expecting some type of retracement or rally higher after taking out sell side and this and trading into this fair value gap. So we want to see this up close candle traded through now and use it as a buying opportunity later. Okay. Let me see if I can find a few more order block examples and then we'll be done. Let's see. Let me find a clean one. Okay, so right here, this is a bearish order block. Okay, now remember, we have a low, a high, a lower low. If we're bullish, we want to see us trade through this last up close candle, treat it as support, and then rally higher. But we're not bullish. Right? Why are we not bullish? We traded into a 4-hour fair value gap. Okay, we've taken out sell side here, or buy side, sorry, with this high, taking that out. We break lower. Okay, so now we've taken out buy side, traded into a fair value gap. Do we want to see this act as a breaker or an order block? We want to see it act as an order block and just simply trade to it, treat it as resistance, break lower. Okay, if we're bullish, we want to see this candle traded through and act as support because it's a low, high, lower low. This last up close candle in between the two lows would normally be your breaker. But if we're bearish, okay, that's our sentiment. We want to see us reach the opening price of this last up close candle and send price lower. We'll do the last one right here. So this is a breaker. Normally, this last up close candle before this down move, this would be your bearish order block. Okay, if we're bearish, we want to see price trade up into that and break lower. Okay, but why aren't we bearish? We traded into a daily fair value gap. Okay, and we had a 4-hour fair value gap up here that needed to be reached. So we have a low, high, lower low. We violate and completely disrespect this up close candle. We trade above it, and you can see the bodies respecting that right there, and then we rally. Okay, so I hope that helps you understand a little bit the difference between order blocks and breakers. If you have any questions, just let me know.